Hello traders, this is my beginning of the week video. So far this morning the futures are up. This chart here is the closing prices of Friday, and basically we got a nice little rally going on in global equities. Okay, and this is the VT ETF. It tracks global equities x the US equities. So it's just all the world equities, not counting the US. Draghi had some positive comments there Friday, and we had a nice little rally in the Asian markets, and it drove the indices higher. And basically, we're coming into a resistance zone. I wanted to point this out this week. So basically, I do see some more upside this week. We're probably going to be testing the upper end of our expected moves again this week, and we probably are going to be running into some significant resistance middle or late this week, in my opinion. Okay, darn it. On this view of your Vanguard Total World ETF XDUS, as you can see, we're heading right into the daily 200 SMA, which I think we're going to tag this week. And so we're going to see some more global bullishness this week into this significant resistance zone. And I consider this as significant because, as you can see in the past on these prior volume profiles on your monthly time frame for the past 4 months, 1, 2, 3, 4, we have found volume dropping off as we approach these level highs after coming off of a significant low in the global markets. So just keep this in mind that we're probably about to lose some significant steam. And to push out of these volume distributions to the range higher, what you really need are short squeezes to promote higher prices from here. And quite frankly, I do not see a potential for short squeezes in the distant future. I think we've burnt out a lot of our short squeeze potentials on these markets. So I just wanted to point that out, that we're nearing a significant area that we're either going to go sideways or we're going to start seeing some responsive selling. And what I like to look at is like on the daily, you see how we went from a very oversold situation on our world ETF, and we have crossed over our 125 SMA for a bullish signal. But see how expanded our daily range is? That's not supportive of short squeezes at this point. Basically, we have to have new monies to continue to roll in here to produce on a low volume profile. So that's what I'm thinking in the global, from a global standpoint. And see, even on your lower time frames, all these lower time frames, nothing squeezing to suggest that we're going to see significant continued upside. Now, like I said, we did have some more room, and you can see the futures are all marking up here. Your the strongest of the bunch would be your one of them is your Nikkei, and that's something that I definitely wanted to see because the concerns that I mentioned in my prior videos, and we're also getting a very strong bid in the crude oil space. So those are two areas to really keep on watch here, or not crude oil, yeah, your gold space. Okay, and then crude, and then as you can see here, the U.S. equities, they aren't even topping the list. They're actually on a sell signal this morning, a little bit of profit taking. So yeah, we're down 450 on the ES this morning. I don't know if Walmart's out yet. Walmart, there's a squeeze set up in the retail that could propel us higher today. I go down smaller time frames here. Yeah, it doesn't look like it's not printing the news yet. But Walmart is going to be a very critical indicator of how the markets are going to go today. It's already extended on our squeeze indicators. So a lot of the moves, the problem is when you're getting to the back half of the earnings season, a lot of the moves which to the upside have already been priced in because of the prior bullishness in the markets. So the companies at the back end of the earnings cycle really have to have solid guidance expectations going forward to support the move they've already had. So just keep that in mind that we are in the back end of the earnings cycle, and despite the fact we have a squeeze scenario setting up in our retail, it's something you've got to keep that in mind. Squeezes can go either way. The daily is expanded. We have this. We've come right into this trend line for a breakout higher or breakout lower on our daily, and Amazon's really been pulling us down going into this Walmart numbers. But as you can see, the patterns are starting to tighten up a little bit on our 4-hour, and if you go on our 1-hour, it's a very tight squeeze that we started pushing out above the range on Friday going into the Walmart earnings. So keep that in mind. This is a squeeze scenario. The most powerful, because of the situation right here, the most powerful move would be to the downside in this scenario, in my opinion. But just keep that in mind. This is the most powerful squeeze scenario we've got this week, because the other squeezes I had mentioned had already played out in the financials and in the crude oil space. Those were two others that played out Friday, and they had a nice little pop in the Friday session. Our gold has a squeeze scenario on our 1-hour, and it is resolving to the upside. Very powerful pattern. I just wanted to point that out. We are breaking out above a bull flag breakout situation that's happening this morning. Most likely here in the next week or two, we're going to see 1360, another $30 move in our crude oil space. This is a very strong pattern crossing over top of our volume point of control. We are literally on the yearly crossing into bullish territory as of this week. As of today, we are literally crossing into the bullish scenario on the yearly for the gold, likely retesting the highs 1365 area here in the next few weeks. And this is a very strong range on the weekly. So this is a rapidly, this could definitely be a very strong pattern for gold this week. Now, crude, on the other hand, I think it's kind of capped out right here. You see the low volume node here? We're going to need some sort of significant news, in my opinion, to send crude soaring higher, in my opinion. We are breaking out of the 2017 value area, trying to get back into the 2018. But this is a scenario which I'm a little bit leery about, going into the 125 SMA, finding resistance at the 5650 area. Now, if you go down in your time frame here, we do have a little bit of room up to our daily 125 SMA, but we're finding resistance at our weekly, as right here, right now. And if you go on your daily time frames, the issue I've got right here is that we are already at our 2 standard deviation move. It looks like we've got a little bit of potential that, it's trying to hold in there. And there's a channel range high that we've already come out of here. So just keep that in mind, that we don't have a squeeze scenario on our smaller time frames to promote a short squeeze, with the exception of our 4-hour. As you can see, there is a little bit of a squeeze set up here on our 4-hour going into this week. And the dollar does seem to be relatively strong. That's another driving force behind it. So just keep this on watch here. We might be breaking out, but it does look extended to me. Our 4-hour, which is actually has the most squeeze potential, we are getting a MACD potential cross here already. So I do think crude is a little extended. We had our squeeze last Friday, in my opinion. So we'll just keep that on watch for a potential move for a breakout. And one of the critical things that I look for whenever I'm looking around at the markets in the start the week off, I want to see squeeze scenarios in the major sectors. And as you can see, most of our sectors coming in today are pushing the 2 standard deviation. And even our risk on sectors, they are maxed out at the 2 standard deviation, which can go higher, and we have room to go higher. But our bullish sectors are still relatively, or our safety off sectors, they're still showing relative strength too. So that's a little concerning here. One of these two things are going to have to break. And we're starting to see a little bit, it's either a bull flag or we're actually starting to see rotation out of our utilities, given the recent bullishness in the markets. But just keep that in mind. It's not a clear signal. We're either getting bull flags down here on our defensive sectors, or we're going to get a full-on bullish scenario in the markets. Another area driving force for this week, we're seeing a little bit of responsive selling here in the DAX. We've got this primary channel that I would have thought for sure we'd be at the highs of the session this morning. But here we are seeing a little bit of responsive sell-off in the markets. So we'll see what happens. We are getting a bullish cross on our MACD. I would have thought for sure we would be up here at the, I think that's the 125, yeah. And this one here is your 200. I thought we would be testing the 125 here on our DAX this morning, but we're actually seeing a little bit of profit taking this morning. So that's a little concerning that the markets should be actually on fire this morning, but they're actually on a sell signal. So just keep this one on watch. And like I said, on the 1 hour time frames, I like to see squeezes to enter new positions. And we're coming into this week, and on all of my major indicators, we are pushing this 2 standard deviation move to the upside on our major indices. And the one thing that really stood out for Friday, and that was our Russell. And basically, Russell is weighted with 3 main things, and that's your financials, that's your energy sector, and that's your biotechs. And all 3 of those were super hot Friday. And so we had a major driving force in our Russell Friday. So just keep that in mind. That's where we want to see continuation in those 3 areas to support the bid under this markets. Okay, I wanted to show FANG and why it's finding responsive. As of Friday, we started seeing some weakness in FANG despite the rapid move up in the markets. And basically what we're doing, we are coming off, I hate the way this does this. We have a bell curve for 1, 2, 3. The past 3 months, we have been top down on this bell curve for FANG. And it came up into that again, and now we're seeing some responsive selling in FANG once again. And if you go out on our weekly, yearly time frame on FANG, as you can see, this bell curve situation on our yearly, to go higher from here, we need to start seeing short squeezes in the FANG stocks supporting price. And right here, right now, that is not the case for the FANG, in my opinion. I have a conglomerate of the 4 names in this chart pattern, and we're seeing a volume resistance at this price point, capping out our FANG stocks. So keep in mind that the markets do decide to start selling off, that it's going to be very difficult for FANG to be pushing higher. So what I do secondarily, I look for squeeze setups. And I have pointed out that we have a volume void above us in our FANG stocks. So if the markets were to happen to start selling off here, and you can see with our MACD, we are losing momentum in the, like Google, despite very good earnings. We're actually on the verge of a bearish cross for Google here with a squeeze situation going on here. So this is a warning sign to me on the FANG stock, or well, not Google, the FANG stocks in general. But basically, by losing all this momentum all the way back from December, and the situation that we have a squeeze set, it looks like our FANG is losing momentum here, and we're going to roll over on our FANG stocks. So this is just a situation I did want to point out. And then also this week we have Apple. Apple's going to be in the news because ADI is reporting, and that's a major supplier for Apple cell phones. And it has been on a tear despite the fact of the horrible iPhone sale news. And I'm gravely concerned that it's going to put negative pressure on our Apple uh, going into the end of this week and possibly into the end of this week. So just keep this in mind. We've had a rally since earnings, and we've kind of went flat on Apple. I just don't see how ADI numbers can be supportive of Apple prices here. Look how expanded we are on the 4 hour. This thing has been on a tear since the has been on a tear with the markets, and we know Apple iPhone sales are down, and I just do not understand how this thing can stay up at these lofty levels if the iPhone sales are as bad as what the prior earnings reports have been out. The squeeze looks totally in to me. It's completely overvalued. You know, look, we went into November way down here at $86 level, and now it's $20 higher than that, knowing that we got, weak numbers coming out. This to me is a screaming short going into Thursday morning's earnings. I think that's when it is. So that's just a few things I wanted to say. Let me see if I can show you the calendar real quick. Okay, to finish off my video here, some of the top earnings this week. And like I said, the markets have gone up so much. A lot of these, it's easy for them to disappoint since expectations are so high going into this week. So just keep that in mind. Anytime you're on the back half of the earnings season, these stocks tend to get more punished more than the ones on the front end, in my opinion. So just keep that in mind. But Analog Devices, that's the big one. That's Wednesday morning, in my opinion. That's going to have a major impact on our Apple. So I'm not. So I don't see Apple doing much of anything today, in my opinion. And so just keep that in mind. And we do have a Baidu reporting the end of the week, so that's going to that could be a driving force for our Chinese stocks into the end of the week. So we do have some China names towards the end of the week, but considering how things are going over in China, I'm not too bullish. I think they've already had a massive run up, and to push it further is going to be difficult. So just keep a really close eye on your IWM. It is an overbought situation for the Russell, and it's going to lead the way which direction these markets are going to continue to go. And also very important, which the title, I forgot to mention the title of this video, we have range compression this week. That means that our implied volatilities for our major indices like our SPY, they are compressed further than we've seen in months. It's like a $32 range on our SPY expected for this week. So thinking that there's going to be huge upside potential in our options it's going to be far harder to make doubles and triples in our options this week, in my opinion, going forward. So just keep that in mind. Unless news comes out to the downside, downside, of course, there's a chance if something happens, but just keep that in mind. It's going to be much, much more difficult to make big returns on options this week. Thanks a lot, and I will see you on the next video. Oh, like the video if you like it, and give me your ideas and stuff. Comments at the bottom, things to be looking at for opportunities, because we're all in this to make money together. See you later.